This is Scott Becker with the Becker Private Equity and Business Podcast. We come to you regularly with short business and private equity episodes, as well as interviews with brilliant private equity and business leaders. We're talking today to a brilliant sort of litigator at McGuireWoods, David Pivnick, who does a lot of work for private equity funds. Specialty would be sort of healthcare, white-collar litigation, fraud and abuse cases, and so forth. We're going to talk to him today on a very different subject, though, and he's a brilliant, brilliant person, valedictorian of his law school class, just a brilliant lawyer and person. Today's discussion is going to be about how do you, as a professional in business, your own business, react to market volatility. We've been in this spot for the last couple of weeks for the first time, it seems like, in a while. We've had significant market volatility, almost a correction in the NASDAQ, a drop in the S&P. It's bounced back and forth. It bounced back yesterday, but it was real up this morning, now bounced back entirely today, and it's back down to, a loss today. How do you think about that as a professional? And David's what I would call a midlife professional. He's not on sort of the senior stage, the 60s plus stage. He's also not a kid. He's got a family. How do you sort of think about market volatility as an investor? And do you think about it, or are you immune to it? I mean, some of us are more panicked by nature. We think about it a lot, others less. How do you sort of look at market volatility and think about it?
So on a personal level, I don't think about it a ton to start with, and probably less than I should. But the explanation for that is pretty simple, as you just alluded to, which is I'm somewhere in the middle stages of my career. I think still closer to the beginning than I am towards the end, I think, if I was mapping it out. And so day to day, I sort of look at market volatility as something that is, I'm invested both in retirement accounts and otherwise for the long term across the board. I don't have investments that I'm planning on liquidating anytime soon. And so I day to day am not overly concerned. I certainly monitor the markets and have a decent sense of how things are going, but I'm not actively worried about it day to day because I'm in it for the long haul, and I recognize that there's going to be fluctuations, and likely over the period of time between now and when I'm truly worried about what the numbers look like, there's going to be multiple dips, but also presumably I expect there will be some steady growth, as there has been over the last several years. So even looking at, the recent volatility at some of the bad days, the markets are still up meaningfully over the last few years. Looking at it at a macro level. From a business standpoint, I think, there's a slight concern as a law firm looking at it, that obviously we have clients that are impacted by the markets as well. And so trying to factor that in both to approaches, in my day-to-day to litigation, where clients might have sensitivity with payments that are coming due now versus a longer term time period, if they're looking at settlements, cost of litigation could be a bigger factor. And then looking at from a firm standpoint, trying to make sure we're diligent, as we always try to be, about, being very efficient and doing what's necessary for the client and no more. Billing appropriately, obviously, is highly important, and making sure the clients are aware of what the bills are going to be, but then also being diligent in getting bills out the door and making timely collection efforts, and sort of pushing on that front, because volatility in the markets, that isn't just the direct impact. It impacts our clients, the folks we work with, and we're counting on in connection with our own revenues, so that it's important to stay on top of that.
But that's a very important point, and distinguishing the personal, like one's own market portfolio and their long-term perspective, and understanding how they view that. How much does it bother them? How much do they get angst or a stomach ache when the market goes down a lot versus not? And then one of the beauties of being totally mid-career to, like, let's call it mid-career, is the real focus has to be on continuing to have your core business going well, your core profession going well, versus undulating too much on the market day in, day out. And I think that's a really, really important perspective. Whereas if you're retired and you don't have enough going on and you're not focused on building a business, you probably you could be more sensitive to market ups and downs for a bunch of reasons. One is boredom. Two is not having enough, long-term longevity to the market. and just having a bigger concern that you can't replace the money if it goes poorly. So fascinating. And then I think the other thing that you said, which I thought was so valuable, is you also look at it from a business perspective and a client perspective, whether in the law business, the media business, any kind of business, how does that impact the job market? How does it impact other things? Obviously, when everything's flying in terms of the stocks and the business going up and companies' market caps going up and their valuations going up, they're more comfortable spending wildly or well, more comfortable investing and buying new businesses. And there's a lot of things that come out of that could go a little bit slower when things are tougher, or they don't feel as a company or as a business as valuable, or things are tighter. So I think that perspective on it is very well stated as well. And amongst colleagues, like we've had the first gyrations in a while the last couple of weeks. Is the markets, are they a regular topic of conversation around colleagues or businesses, or not so much, or more just really a concern about, are there recessionary indications, and will that have an impact on business? Are either of those things talked about a decent amount amongst colleagues, amongst friends at other firms, other business friends, just other friends? How do you sort of view those things, and how much of discussion do those get?
I think it's different between the different groups. So with my colleagues and folks I work with at McGuireWoods, I think the discussions are more on a macro level about, some concerns of whether there's recessionary indications and what the next couple of years are going to look like, and some of the factors that will play into that, and how those risks can be managed, or at least thoughtfully considered, with friends and others who I know from college and law school, or some high school friends as well. I have far more frequent discussions about stock markets on a day-to-day basis, tailwinds, interest rates, and particular investments that are of interest. And some of that is the nature that some of those friends are traders and are actively managing investments such that they have insights that they're sharing. Others, it's just more of an interest from their own investments. So I think from a personal standpoint, I'm far more likely to have the dialogue day to day and be actively thinking about the market and dips or potential stocks that have potential. With colleagues, it tends to be far more about whether there's concern for a recession and bigger picture topics.
And let me ask you this question. I don't want individual stock tips and those kinds of things at all, of course, but any advice that you would have to other professionals? I mean, in terms of keeping an eye on this, while focusing on their core business, any thoughts that you have that might be helpful to other professionals, who are trying to manage these same concepts of trying to stay healthy financially, build net worth outside the business, while building a business? Any advice for others?
Yeah, I mean, I can offer advice, but I will offer it with the caveat that in a lot of areas of my life, I'm not necessarily overly conservative, but in terms of financial advice and investments, I am fairly conservative. And as I talked about in my first answer, a few minutes ago, I look at things for the long haul. So, I mean, my main advice is having a long-term investment plan, not trying to just jump into day trading or making big gambles on random hunches, or over investing in a given stock because someone gave you a tip. I think looking at sort of core companies, businesses that are in it for the long haul, some dividends, some stocks that pay dividends consistently so that there's a bit of a return ongoing, can be worth including in the portfolio. But I'm looking at it more from a long term, either investing in the index or stocks that tend to have a strong track record and are likely going to be there and have grown appropriately, over the next decade plus, as compared to trying to catch lightning in a bottle, which obviously there can be significant returns, and timing investments in companies that hit big can be very lucrative, but that's not where I've sort of put my focus. I also haven't invested, for example, as a total sidestep, but I've never invested in cryptocurrencies or Bitcoin, etc. But I certainly have friends who have made millions of dollars literally investing in Bitcoin because they timed it well. But that kind of timing mechanism is not where I'm focused at all. And I think for the average young professional, sort of thinking long term is probably at least how I would approach it. It doesn't. I won't even say it's the best approach because other people's mileage may vary, but that's certainly how I look at it.
And I think that's all extremely good advice, very thoughtful. I'll ask you the tough question, the tough question. When a moronic friend, and not that any of our friends are moronic, makes a fortune in Bitcoin investing, how do you think about that? Do you just shake your head? Are you happy and thrilled for them? Do you hope they buy dinner once in a while or drinks once in a while? Or how do you think about it when your least brilliant friends, and you're a valedictorian, one of my closest friends forever is graduated at the top of his class at MIT. How do you think about it when somebody who's relatively, you would think of as at least academically not an intellectual giant scores big in Bitcoin or something else that seems so ridiculous, that makes millions in it? How do you think about those things? And are you able to sort of get out of one's head and not worry about the FOMO of it, or not have the Schadenfreude part of it? How do you think about that when a friend who's a moron hits it big in Bitcoin, for example?
So I have long ago come to the conclusion that for me, it's a very simple dichotomy. If you're my friend and something good happens to you, no matter how fortuitous, random, lucky, whatever it might have been, I'm going to be happy for that person and support them. And if I hear something that is objectively good for someone and my immediate reaction isn't, oh, that's amazing. If I sort of think, oh God, they don't deserve it, etc., I quickly reconcile in my own head they're not actually a friend, because otherwise I would have been rooting for them, and then I move on. So I have one, I'll say acquaintance more than friend, who did strike it big, and ultimately I'm happy for him. It's provided a good lifestyle for his kids. I'm not expecting any free meals, but for me that's sort of, if you're one of my friends, I am inherently always rooting for nothing but the best for you and your success in all things. And so when I hear good news, I genuinely will be happy for others. And if I can't muster up that genuine happiness, I usually look at it more as an indication of that relationship isn't as valuable to me as I would otherwise hope, and move on.
But I think that's a really good thought. You ought to try and find yourself looking at it positively for the other person. I'm reminded of like being on tennis teams or other sports teams that are individual matches, individual wrestling matches, individual tennis matches. And if you find yourself, when you lose your match, kind of quietly hoping that all your buddies don't win their matches, you need to do some internal soul searching and figure out how you look at that, even though those could be normal feelings. You don't want your buddies to lose, your teammates to lose just because you lost. It's a similar type process of thinking about, if there's something I need to adjust, if I start to feel that way, oh God, I lost. I sort of hope there's some misery in company and stuff like that. It's not a good attitude. I love your perspective on it, David. Both the binary thought of really judging, is it a real close friend or not, and also the thought of like, the secondary thought of that I have is, if I'm thinking that way and I'm not happy for the person, aside from whether they're a friend or not, I have to do some internal soul searching myself as to why I don't have a more positive attitude and keep myself in the right mindset and positivity. But I love your thoughts on this.
Totally agree. I will just back up a minute ago to something you said, which is, you indicated if you lost the wrestling match, and I will just note for everyone who's listening to this, no one believes that you've been engaged in any wrestling matches in your life. I don't accept that premise, but the rest of your comments I agree with wholeheartedly.
Well, I appreciate that. I remember when a long time ago, when you were a terrific athlete. It's been some time, but I remember those days. In any event, we digress. David Pivnick, absolutely brilliant, and actually a fantastic athlete and hockey player, not a great golfer, but a brilliant person. It's always a great pleasure to get to visit with you and talk with you and hear what you're thinking. Thank you so much for joining us on the Becker Private Equity and Business Podcast.
Thanks for having me, Scott.